Hi folks, looking at the 5th of August on the CAD Swiss 15-minute chart. One of the things I want to look at is what if you don't get a standard range setup, which typically price is contained within the previous swing high or low, or from a more textbook point of view, you've got a double touch of the highs or a double touch of the lows. But what if it doesn't give you any of those definitions that you use for a range? What if price, as in this case, is making lower highs, lower lows, and then it's making higher highs, higher lows, and now it's making, at the moment, lower swing highs and, what's looking like lower lows. At the moment, it's really indecisive. It's not trending down. It's tried trending down. It's tried trending up, and at the moment, it's looked like it's trending down again. So we've got a real mixed picture of price making lower highs, lower lows, then it's making higher highs, higher lows, and now it's making lower highs, lower lows, but it's not contained within a previous swing high or a previous swing low, which is a typical range-bound definition. What's happening is volatility is expanding, and those price movements are making lower highs, lower lows, and higher highs, higher lows. We've got basically what a more stereotypical definition is a cone or an expanding triangle. So this is one of the less commonly occurring patterns in my opinion, but nevertheless let's go through it. So you've got this expanding triangle, price making higher swing highs, but also price is making lower swing lows. So you've got this expanding triangle and price is range bound within the confines of that expanding triangle. Now what ultimately is going to happen is if price continues to make lower highs, lower lows, we could see price continue to expand, and then price could start making high highs, high lows. So for example, if price, let me just scroll back on the chart. So for example, if price starts making lower highs, lower lows, as it is, makes a new low for the day, then price might start making high highs, higher lows. So if it does break new highs or new lows, and remember what I'm interested in is the extreme boundaries of support and resistance. So the extreme boundary at the moment is the current day's high and the current day's low, and we can treat that as our not exactly a standard and typical range bound definition, but nevertheless price is contained but making an expanding triangle. So if price does make a higher high, for example, chances are if price does start to turn around, which is what it's been doing recently, we could start to see lower lows being made. So again, we've got our range definition, and price will give us a breakout pullback setup, and most likely that breakout pullback setup is not going to trigger, which seems to be the theme of what's going on this morning. If it does turn around and makes a new low for the day, then it'll be a question of breakout pullback setup, and most likely won't trigger. If that was the case, what I can do is then just redefine where the range bound location is as volatility expands. Now I suspect what might ultimately happen today is that price is going to continue to chop around in the current day's high-low range, and what we most likely will end up seeing is the start of a larger consolidation. So price most likely will close in the middle of the previous day, or tomorrow when I'm looking at this, price will most likely be closed within price will be range bound within the previous day's high and the previous day's low. So that's not typically the best place to take a trade on board. What I'm looking for is those overnight ranges at the high or the low end of the previous day's high-low range. So most likely what I expect overnight to develop is this range that's in the middle of the previous day's high-low range, and that can be quite typical of this type of price action. Now if that's the case, it will most likely lead to a larger or slightly larger consolidation, and when we come to the 240-minute chart later in the day or tomorrow morning, we will most likely see that as the swing high, that as the swing low, and price will have made a higher low and a lower high within the previous swing high and the previous swing low. So we might not get this on the 60 or the 15-minute chart just yet, but on the 240-minute chart tomorrow, we might see this as our range-bound definition, but based off a slightly larger time frame, as price might potentially continue to chop around. But for the moment, what I'm looking for is the extreme boundaries of support and resistance, breakout pullback through the highs, breakout pullback through the lows, and if price continues to be range-bound, it's a wait situation.